Good morning, everyone. Welcome back to another portfolio review. Figured I'd get it going since we've done some changes here, added some new positions, well, a position, and then we dollar cost averaged some other positions. I finally have a title for a video that I don't have to think about. I got my stimulus check yesterday, so we'll kind of talk about that and what I did with that. And then I also got paid today too, so I might be adding more to both Robinhood and M1 Finance. We'll kind of take a look at that and maybe kind of decide, and hopefully next video I'll talk about some more positions I added or whatever else I chose to do. I imagine with this week and people getting the checks that I could see the market going up, because if we look at the last week, it's been trending down, but I'd imagine it will start going back up with people getting paid and maybe wanting to put it in the market. Who knows? But in the last month, we've actually had overall pretty good progress. I mean, since it really hit the bottom, gosh, what was the bottom? Let's take a look at the last 3 months, because I'm thinking that was it. Because I think, yeah, right here was where we hit the bottom, 23rd, and then since then we've pretty much just gone up since. But so yeah, just switching back to the day view. Like, we're right before the market opens. It's 8 o'clock, 9 o'clock over there. It opens at 9:30, so we'll see. Probably won't make it that far, but as we go through, I bought some more of NRZ. At one point, let's take a peek into it. My average cost was like $10 a share on it. So I wanted to buy some more because I know NRZ is going to eventually go up. People need real estate. I think this one is specifically REIT. Yeah, real estate investment trust. They're all REITs, but it's mostly through consumer loans, so mortgages. Right now, it's kind of taking a hit because mortgages are basically, I don't know if this is necessarily it, but right now, mortgages are basically free for people to take out. Not necessarily, but very low interest. But anyway, I wanted to dollar cost it down and whatnot. And I know that their dividend's going to go back up. It's not going to stay low forever because they did slash their dividend by like 95%, which is kind of unfortunate, but not a big deal. So I picked up quite a few more shares of that. I think 10. Yeah, because I was at 3. Now I'm at 13. Bought a couple more of Wells Fargo because, again, I really like the bank. I think they do good things. So now I have quite a bit of my portfolio invested in it, $500 into Wells Fargo, but they pay pretty well and they pay 4 times a year. So what can I say? And then I don't think I dollar cost average anything else down because there's just nothing cheap enough, I guess, that I wanted to dollar cost down. And we'll kind of get into that once we get to the stock portfolio piece. But I did add American Airlines. I bought 7 shares of American Airlines just because it was another one that was at a good price. I've been seeing a lot of people like talking about like, should you pick up American Airlines? And I've got Delta Airlines. I like American Airlines. Other ones I've thought about, Southwest, which I think is LUV. Yeah, Southwest Airlines is another one that I've thought about, but at $30, I just didn't see as much of a value there. I know Southwest is another great brand. We'll think about it. Another REIT store, thinking about that at almost under $20. You could get quite a few. JP Morgan would be another pickup. Marriott would be a good pickup because, they've been consistently trading for 120 to 150. I think JP Morgan's a little bit more, but for over the last year, and these are some solid companies. I mean, think of the companies that went from trading like $100 and now they're down to like $15 or $20 a share, where Marriott and JP Morgan maybe dropped $40. That's still a lot, but you can tell they have very solid sheets. And considering Marriott's still trading at $80, considering they're in the hotel business, like, sorry, I had to drink some water here. They're probably one of the ones that got hurt the most. Like, airlines got hurt as well, but so did hotels. So something to think about. Maybe try to get a couple shares before they go back up when they inevitably do. Trying to take a look and see what other ones I see. LTC is another REIT company that, you know, an O Realty Income would be another one to pick up, but they're starting to trend back up, and I don't know if I see the value in them right now. And I also own them in M1 Finance, so I don't see it as necessary to do so. Is this really Costco? Holy cow. $300 a share. Yeah, so they trade for quite a bit. But yeah, I'm just kind of talking through some of the different ones I'm watching and thinking about adding. I don't know where I was. I was already past there. This is Cisco, Costco, GM, Verizon, Walmart. A lot of good companies. Boeing's starting to come back up after a while. American Express, Citi would be good ones to add. MasterCard. Different ETFs wouldn't be bad to kind of balance it out and make volatility a little less. Disney probably wouldn't be a bad one to add. But again, I'm also doing them in M1, so I just don't see it as necessary to invest in them over here and over there. But I could. But yeah, I mean, I have quite an array. I just want to invest in a lot of different companies. I find it really fun. And it's just the fact that they all pay at different times, so you're just kind of always getting paid. Let's take a look, because I haven't quite checked yet to see if I have any pending dividends coming up. It's been a very slow month as far as dividends go, and I think it's just due to the fact that people that did get bailouts can't pay dividends for the next while, so that could hurt the income, but not a big deal. So since April started, let's just do it by dividends. Pepsi, Coke paid. We have one from Keurig, Dr. Pepper, coming up tomorrow, so that'll be 75 cents. And Altria Group will be at the end of the month with a fat $3. And for me, that is a really big dividend. That's the biggest one I've ever gotten. So hopefully in a couple more months, we can get an even bigger one than that. So right now, this is the one to beat. And then AT&T announced for May 1st, they're going to be paying 50 cents. So that's awesome. But yeah, so I got paid today. So we'll just kind of look and see if there's anything that I do want to decide to add. But for now, I'm pretty okay with what we got. Let's take a look at the M1. Oops, I haven't logged in yet. Oops. Yikes. I don't know. So we got some dividends paid today, so that's why we're at $3, which would have helped yesterday, but I'm not complaining. But yeah, we added another, I think, $400 yesterday to even it out. $200 in Robinhood, $400 in this, because I need to get them even, because that's what I like. So both of them have had $3,050 added, which I've now learned to see right here. Cost basis is how much I've put in. So $3,355. Like the $574 is just the miscellaneous from dividends. Is kind of what I've come to learn. But yeah, this is a very interesting, kind of chart to look through. I can see kind of how many shares of each company I own. NRZ is the one that's the most. This needs to be averaged down like ASAP. But we'll eventually get that. I can see the average price of everything. And yeah, it's just something that I've kind of gone through and played with. You can start to see that a couple things have gone into the green now. Real estate's definitely still getting hit quite hard. But that will bounce back, I'm sure, soon enough. And that's just something to kind of keep in mind when investing. Is a lot of people get caught up like, oh, investing is so risky, you're going to lose all of your money. And that's not necessarily true. Let's go back into the holdings tab. To go bankrupt and lose all of your money investing, you would have to see, say, 80% of these companies to all hit zero for you to start losing money. And if you start seeing them trending downward at a pace that you are not comfortable with, you can sell at any point. You're going to lock in those losses, but you can still save some money. So let's take Coca-Cola, for example. I have in total invested $16. And right now they've dropped to $14. That is below what I'm comfortable with, theoretically. If I sell it off right now, I've realized the $2.06 in losses, but I've still made my $14 back, essentially. And, again, the opposite can be true. This iShares, whatever. I have spent $236 on them. The value has gone up to $240. If I sell it, I've made $4. So in those two examples, I've netted $2 from investing. But back to my point of, for you to lose all of your money, like 80% of your companies would have to go out of business. Corporate grade bonds, possibly, but probably not. International bonds, possibly, but probably not. AT&T has, people have done videos about AT&T and how they may have a lot of debt right now, but they are a company that is growing and has a positive future. Merck is going up because they're in healthcare. Realty, Dominion, a lot of these companies, I personally haven't picked them, but the portfolio that I kind of mirrored off of, he has done extensive research and I think he knows what he's doing. So I have no problem. And again, Disney is not someone that's going anywhere. Bank of America is not going anywhere. Verizon, Pfizer, Aflac, none of these companies are going anywhere. So for me to lose all my money is just not possible. And I don't remember where I was going with this, but the point being is to also I remember now, to ease with that, you've got to diversify, because at different points for different reasons, different companies are going to be affected. So what do I exactly mean by that? Granted, this coronavirus has affected everyone all at once. If we take that out of the equation, I'd imagine everything from tech up would be just fine right now. Now, why did I say just tech and up? Because energy, outside of getting smacked by the coronavirus just like everyone else, and traveling being hurt, and no one really needing gas or other forms of oil, which is essentially what's in this energy sector, Saudi and Russia were playing like chicken to see who's going to drop their prices lower. That really affects the energy. Now, in a year's time, they'll probably be fine, and there might be something in telecom that's getting affected, like maybe a new merger between two companies, or a new company that's coming out that's offering 7G at a superb rate and these other companies can't match right now. Or maybe in a couple more months, something will happen with finance. At different points, different companies get affected. And with that, finance might be taking a hit, but utilities might be soaring because of that. Or telecom might be hurt, but consumers booming because of it. And you kind of have this balance of maybe one sector doing bad, but another sector booming because of it. Or in this case, because everything is going down, now healthcare and bonds are going up to kind of counteract that. So that's just kind of the point I'm getting at, is it's all about a balance. And diversifying is very useful. And that's kind of what I'm trying to do here is I try with my stock portfolio to keep track of what I'm holding in what different sectors. And we'll kind of talk about that some more when I get into the stock portfolio piece. I don't know how many different companies I own. I'll have to look at that as well. But with this as well, I can see that I have 51 positions. And there might be a point, once everything starts to trend back up, is when because I don't really want to sell and lock in my losses of like $15 or $16 or $50. I want to see stuff in the green before I sell off and make some money, before I change positions on certain companies. Just because I want to do my own research and I want to tool this to my own preferences. Because where the person that initially made this portfolio may not like American Airlines, I like American Airlines, so maybe I'd want that over here. Maybe not, but the point still stands. But if we also look at activity, you can see, if we just sort by only dividends. Yesterday, we got paid by Main Street Capital. Not a whole lot, but hey, every little bit helps. Actually, they paid twice, so that could explain it. So 27 and 7, 45 and $1.20 from Store Capital, so that's awesome. So kind of cool to see that everything's trending up. So I can't wait till the end of the month to see how much I made. Probably not as much as last month, but we'll see. I also didn't bring up the M1 Finance portfolio just because nothing's updated on it. Check out last video if you want to see March's results. So let's see, 2 through 34. So I have 33 positions if I'm counting right. So not bad. I wouldn't mind to have like 50 over here and 50 over here, but we'll see. So this is kind of that sector percentage that I'm talking about. Is right now I'm very heavy in financials, heavy in consumer defensive, consumer cyclicals. I also kind of have a big sector of energy and ETFs, which kind of spreads me out even farther. So ETF technically isn't a sector, but I wanted to keep track of it in the fact that I have like Schwab Strategies, US dividend ETF, equity ETF. So that just, it spreads me out in different companies. I have a Vanguard one. I have an S&P 500. So those kind of invest me into companies that I may not have in this portfolio. Even though they're not a sector, it just kind of helps ease the percentage. So say the S&P 500 drops 10%, but my portfolio drops 9%. It's because I've spread myself out a little farther. So, I also need to make sure that these are up to date with the newest totals. And I think they should be. But, well, we can always go through and double check. There we go. I don't know why that was overlapping. It's a little weird. But yeah, there's other ones that I would like to add a little more in, like maybe real estate and healthcare. Technology could use a little more, utilities. I want to try to make it as even as possible, but there are some sectors that just, energy pays you fat dividends. Financials pay you good dividends as well, and that's part of it. So stock percentage as well, you can see like the number of stocks that I have bought. Not always the biggest deciding factor because, I may have, 14 shares in Wells Fargo, which is right here, but I also have 13 shares in NRZ, which they look like similar size pie. But if we look, which luckily they're right next to each other, you can see that NRZ I've only spent $90, where Wells Fargo I have $540. And that's where it comes to over here, where I can see the money spent percentage, and you can see that a good portion of my portfolio is going into Wells Fargo, respectively. So that's just kind of my explanation of these three charts. I keep track of which sectors I have and which I might need to consider adding more of to balance it out. Number of stocks to see kind of maybe which ones I need to add a little more. And then money spent, because from that example. Looking at the dividend sheet, I've gotten it updated with the 52 cents here. And so far what we're at for the month, actually I may have updated it. I may not have, now that I think about it. I don't know if I added the new one from Keurig Dr. Pepper, but I can always go back and double check. But I'm pretty much locked in for $23 already this year. And as you can see, December was a big month. A lot of companies paid out in December. And hopefully by then the coronavirus withholding, because I think it was 1, 2, 3, 4, 5, maybe 6 months that they couldn't pay dividends, or a little bit longer. I'd have to look at that. 1, 2, 3, 4, 5. 2, 3, 4, 5, 6. Yeah, it might have been 6 months. So December might be another big month. So we'll see, hopefully. Another thing that I did is I kind of tweaked this. I obviously updated it as of yesterday as far as what my projected dividends. It's not, the farther along we go in the year, the less accurate it is. Because, again, American Airlines, I added as of yesterday, it's not going to pay me $2.80 this year. It's not going to happen because they potentially could have paid out in January or February or even March, and I'm not going to see any of that money that they pay out. But it's still fun for me to see, if I do nothing anymore and I let this just sit for next year, 193 is very likely what I'm going to get paid next year. And again, a fun little statistic is over the next 40 years, $193 now nets me an extra $7,720 in additional income over my lifetime. That's kind of crazy to think that this $193 paid out every single year will give me an extra $7,000. And an extra $7,000 could go towards buying more stocks if I want to. An extra $7,000 in stocks. To put that in perspective, that's an extra double of my portfolio right now is what it is. More than double. Plus $7,000 could go towards a lot of things. No, it's not going to be paid all at once. I mean, that's definitely like hyperinflation in a sense in the numbers, but it's just something to think about. But I've just kind of moved all these down, the older ones, just so I can still, track where I was at the beginning of the year. And it might be one of those things where, I start putting projections for 2021 over here and then move it down as I go. I don't know an easier way to move these down, but I'm sure I'll figure it out. Basically what I did was I had it over here, copied everything down, copy, delete these rows, this would move over, and then paste below it. And it works, so I might keep it. So now I kind of have everything all in one little thing. So I worked on that yesterday. But yeah, really excited to almost pass the $200 threshold. Could possibly do that with a couple more stock purchases because I went from 183 to 193, so that's $10. So another set of stock purchases will put me up over that threshold. Yeah, I mean, even with NRZ going from $2 it was down to 20 cents, I'm still getting paid $2.60 from them, which is pretty good. And American Airlines is $2.80. I added a couple more Wells Fargo, so now I'm up to almost $30 from them a year that they'll pay me, which is awesome. So anyway, moving on to this net worth tracker. Need some water here. Up to date as much as I can as far as this morning goes. Haven't really updated. These haven't been updated yet. They might get a payment tomorrow, so that could change it. But again, with the market where it's at, I haven't been paying on these as much as I should. Where the market was at the end of January and beginning of February was not a good opportunity for invest. It was literally at the highest point it's ever been in the S&P 500 history. It just wasn't a very good opportunity for buying, which is why I put a lot more money into paying this down. Now, could I have put it into the stock market? Yeah, but I probably could have lost a whole lot more. Where this was locking in my X amount of percentage gain. So it hasn't made much progress since, but that is all right. Some values have basically stayed the same. I haven't really updated them. I'm sure vehicles might be a little bit lower, but it's hard to know for sure. I'm sure I'll look into that closer to the end of the month, as that's kind of more of an accurate depiction of where they're at. I'm sure my watch will basically stay the same. I don't anticipate it to drop unless like a newer model comes out, but I don't think they're going to be updating it for a while. It's probably only going to go up from here, which is kind of surprising because I anticipated with the purchase of this one, it was going to go down a little bit, but over time it was going to go up. But I guess sometimes you don't know. These numbers are accurate as of yesterday. Obviously, they've changed a little bit. Not the end of the world. $20 difference, I'd say, maybe a little bit more. But then these other three are accurate as of today. Retirement account went down, but so is the other two. It also helps that I'm not putting any money into it, so it's just kind of stagnated. Because I haven't been putting any money in there because I don't work at that job anymore. Luckily, my new job, I just have to be there for a year, and I can roll that over to their account because they use the same company, which is great. So I can kind of keep that balance without having to move it to a different one or withdraw it or anything. So that will be nice that I can start contributing to that. What was it? Like probably around February, I'll be able to do so. Savings and checking. I got paid today, so that's why my checking is as it is where it is. So now my assets total has up to 35 minus my liability total. Still, we're at 23,000. As you can see, we've made another decent jump up. Even despite everything that's going on, we're still trending up. Still haven't matched the $4,000 change from that month we got our tax returns, but I mean that was also a fat payment. So yeah, all things are going well. Still haven't decided what I'll quite do with my paycheck. I don't really want to, burn a hole in my pocket. I have everything paid off, so that doesn't really affect anything too much. I've got all my liabilities paid off. It's just what I want to do with it. But yeah, right now I'm just kind of taking it easy right now. Haven't really done much. Haven't been laid off or haven't been fired from my job or furloughed or anything. Still doing the training hours at home and getting paid for that. Just not getting as much as if I was working 40 hours twice a week, or not twice a week, 2 weeks in a row. But yeah, just taking it easy here, guys. If you've made it this far into the video, I appreciate it. Leave me down in the comments kind of what your plan is right now, what you guys are up to, how you're spending your time off if you have time off. Let me know what you're investing in. I'm always curious to see what people have and what they're working on and whatnot. But anyway, guys, thank you so much and have yourself a good day.